Welcome to the Hurley Investments Market View Commentary for the 29th of July. And one cow is put down. Leah, it's really messy. In fact, to let the beef cool off, you de-gut it. It's gonna be a smelly fly mess by tomorrow. So we're gonna use a skid loader and dig a hole and take care of that so it won't be out. But well, that leads me to what I was going to talk to you about today. I was 100% certain after all the trouble we had last time that cow would have went right in and wouldn't have wanted to go through what it did last time. There are some times in trading that we are 100% certain. We know exactly what's going to happen. And that is something called the folly of certainty. Because in real life, nobody has any clue what the market's going to do. I spend a lot of time helping people not spend money on a financial plan. There has never been in the history of mankind a financial plan that has worked by design. You can't have a compounding average rate of return for a variable returning market. And with that said, one of the other follies of our market is that we have this model. We've got this model built that models the expectations and future returns of the S&P 500. And there are thousands of models out there that have mathematical computations or artificial intelligence, which really is just a super screener that screens a bunch of data for you. But we have all of these models that still have a 50-50% accuracy on regards to predicting what's going to happen. I'm going to move to the macroeconomics. And here's the short answer. Anyone remember how many rate cuts we were supposed to get this year? How many rate cuts was the beginning of 2024? Wow, Maud, you're on a roll today. It was somewhere between 4 to 6, with the overwhelming expectation that we would have 6 quarter-point rate cuts. They thought maybe a couple of the rate cuts would be half-a-point rate cuts. As the year started, the overwhelming expectation was for somewhere between 1 and 1.5% of rate cuts would occur this year. It was a certainty. Every single model took that macroeconomic event into the expectation. How many rate cuts have we had this year so far? Remember how surprised they were in March? No rate cut. We're still data dependent. If I was going to ask you a question, You guys tell me, how many rate cuts do you think we're going to get, or what percentage of rate cuts do you think we're going to get for this year? If you ask me, I think we get a 1/4 point, maybe a 1/2 point. It might be one rate cut at 50 basis points in November, December. I actually don't see all of the opportunity to have a rate cut in September, but we're probably going to get one rate cut, maybe two. I can guarantee you. There we go. There's a certainty, right? I would expect a 1/4 percentage point, but probably no more than that, because we can't afford to service our debt if we do that. So if we go and take a peek, expectations are 1 to maybe 2 rate cuts, most likely a September or December 1/4 point cut. Now, what will that do to our markets? Well, it'll juice our markets. What gave us a little bit of hope last week? Anyone remember what the GDP number was for last week? It was shocking. But anyone remember what the GDP number was for last week? Someone says 2.4. That's close. The expectation, the estimate was supposed to be 1.9%. The actual was at 2.8%. Significantly higher than expected. And as you go through those numbers, I'm still trying to figure it out, because it doesn't make a whole lot of sense. Current market conditions are volatile because nobody knows. Nobody. That's kind of funny the way that was spelt. Because nobody knows. Last 3 weeks, the NASDAQ fell 8.5%. Here's my question to you guys. Is that enough of a pullback to start another leg higher? What do you guys think? Give me a yes or no. Is that pullback going to be enough? 8.5% pullback. Some of the Mag 7 stocks are down 15, if not in bear market territory, like Micron. But is that enough to start another leg higher? We have one that says no. No one knows, but probably not. Interesting. Yes for the Mag 7, but no for the market. So does that mean you're looking for the S&P to fall more? Or does that mean that the Mag 7 will start another leg higher? No, Kevin, but it might be. Okay, Mary. No, Kevin, but it might be. That sounds like a politician. No, Kevin, but it might be. That's playing it both ways, coming in, going. Okay, so the short answer is we don't know. It's interesting because, Mary, I'm going to somewhat agree with you. Yes, it's probably enough of a pullback for the NASDAQ that we'll get re-engaged and we'll see that start to take off higher again, especially the Magnificent Seven, who some of them have been hit pretty hard, 10, 18% or more. Could we see a pullback in the S&P 500? Yes, most definitely. But someone sent me an email, Kevin, why are we not more invested in the Russell 2000? Well, there are problems with the Russell 2000. And there's some major problems with the Russell 2000. Someone tell me, what's the problem with investing in the Russell 2000? Bill, the rant probably talked a little bit about this. Volume. They are smaller companies that can't be directly invested in for returns. And the problem is that you'll artificially inflate their stock price. And when you go to sell, it'll cause a market crash. And the insider tradings will sell before we do. The short answer is major investors, that's the dumb way to say it. Institutional investors don't play in the kiddie sandbox. There's just not enough volume to make those investments. You need large caps. You need mega caps. You need the ability to invest in them and have the volume to be able to exit for a profit. And the Russell 2000 for individual stocks or the index as a whole, it doesn't hold the volume that allows people to do that. And when I say people, it's institutions. Really, it's a good play from January through the beginning of April. You get out before taxes, you book somewhere between a 5 to 7% return. It's a trade. That's what the Russell 2000 is. For those of you that may have asked me in an email, should we be investing in it now? We probably missed the boat. $200 to $212 was that major part of the wave. if you're investing in it now, you're a dollar late and a day short, or a day late and a dollar short. So we're not into that position and we're not looking at it. Cash. We are creating large amounts of cash through put profits. Our strategy, roll down the puts for a profit and have at the money, which just means you don't want a lot of profit in a put, because if you go to an earnings and the stock has gone down from 120 down to 100, if you maybe have $20 of profit per share of your contract, or like $2,000 of profit, you don't want to have that profit for earnings, because it could have a good earnings and bounce back up and open up at 120. So what you do is you sell those puts. That's the roll. You sell your higher puts and you roll it down to at the money, ATM, at the same money that the stock is trading at. So if we had puts at 120, we'd roll those puts down for at least $20 of profit, or actually at least a value of $20 or more. The majority of that's going to be profit. We put new puts on at 100 and we run that stock through its earnings. We have been rolling puts down for profits and have them at the money for many stocks. Disney, Under Armour was rolled down. Ford, we will let the puts put the shares to someone at $14.50. Ford had such an awful earnings that we do not see some upside in Ford for maybe as much as a year into the future. They are trading at $10.98 right now. We're not going to be dollar cost averaging. We're not going to be picking up more shares of Ford. We're going to be letting the Ford shares get put to someone at $14.50. Square or Block, rolled down puts and added shares. We still have, profits in NVIDIA, Micron, Disney we rolled down, probably Apple. So we're going to have to roll Apple down in the near future. Meta we sold out. Thank goodness we sold out at that so much higher. So I guess that's the short answer of what we're doing and what we're looking at and why right now. Earnings. 160 companies this week, which means I am super busy running numbers. What do I mean by that? If I've put one of our stocks in our list of earnings, McDonald's, Chesapeake, Floor, Rambus, all of these stocks that I list in here doesn't necessarily mean I'm going to trade them. Doesn't necessarily mean we're going to invest in them. But every single one that I list on this list, I check their earnings. I see if they beat top and bottom line. I check their guidance. I check their movements. Shocking to see McDonald's be up with missing every type of boy, they missed everything across the board today on their earnings, and they gave crappy guidance, yet they were still up. So if you want a certainty right there, McDonald's should have been down by 3.74%, not up by 3.74%. Their food sucks, their same-store sales sucks, their earnings sucks, their guidance sucked, their revenue sucked, their problems in China, problems in Korea, problems throughout Asia, problems in South America with opening new stores and getting foot traffic through. Yet why not reward them by $9 or 3.74%? There's a great example where uncertainty doesn't make sense. But the good news is 160 stocks report today. Some 28% of stocks have already reported, and 78% of those met or beat earnings. So earnings actually looks like we seem to be in really good shape. Unfortunately, some of these stocks that had really good earnings maybe wasn't good enough. And I mean something like Google. I can't believe Google's down when they met on top line, they beat on bottom line, and they increased their revenue by 13.2% year over year. Billions of dollars. I'm going to go find out really quickly. I've got it listed here. Billions of dollars. Let's see. What did they end up with? $84.742 billion. They only beat by like 550 million on revenue. $87.742 billion. And the market didn't think that it was good enough. They didn't give Google a win on it. It's ridiculous. Thank goodness we had them protected so much higher. That'll be another one in the near future. We're going to look to take those profits when we see it start to turn. But all of these earnings that you see, I'm going to be going through every single one. How many do I have on there? 4. Boy, I think every earnings here will take me about a half hour. So 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28, 30, 32, 34, 36, 38, 40. Boy, there's 20 hours. It's going to be a busy week. I probably have somewhere in the range of 30 hours of just researching our earnings to see if there's something else we should be in or an industry that's making it. I'm going to be running, it's going to be a 60, 70 hour work week for me this week. Last but not least, someone asked me about presidency. Republican, pro-business, lower taxes, there's a third thing I wanted to say there. So let me remember that here in a second. Oh, no, Democrats pro-poor, more government. I'm going to call them programs. They may be considered handouts as well. Pro-education, though. For years, the Democrats were making sure that education was important. Someone asked me, why do I bring this up? Why would I bring this particularly up? And so it's funny, Bill, because you said pro oil independence. They each are pro energy independence, just in different ways. Republican would probably be oil independence, and I would probably give it over here solar power. And yes, if you want to push me on it, I would say oil / nuclear power. Someone asked me, though, what do I think? And you've got to get back to doing your research. You've got to do your own math. President Trump approved 8.4 trillion of new 10-year borrowing in his full term in office, or 4.8 trillion excluding the CARES Act and other COVID relief. President Biden approved 4.3 trillion of new 10-year borrowing, or 2.2 trillion excluding the American Rescue Plan. President Trump approved 8.8 trillion of gross new borrowing and 443 billion of deficit reduction during his full presidency term, where he actually reduced the deficit by 443. President Biden so far approved 6.2 trillion of gross new borrowing and 1.9 trillion of deficit reduction. So there's your headlines. But the problem is none of that 1.9 trillion of deficit reduction has occurred. And actually, if you throw back in the Inflation Reduction Act and the student loan cancellation, it's not there anymore. It's gone. Here is the short answer I'm going to give you. And I'm going to copy this website and I'm going to post it in here for you guys to have. Both parties ran up the deficit. There's not one party that's better than the other. Obama ran the deficit up by 50%. He had 8 years to do it. But again, that is a misleading figure. It's 50% of the deficit of when he started office. One of the best presidents was, actually, take a guess. In the last 6 presidents, who had the best deficit reduction ratio, or actually lowered the deficit. There you go, it was Clinton. Someone tell me, how did Clinton do it? How did Clinton actually lower the deficit? He did have a good economy, but that's not really how he lowered the deficit. And he was able to raise taxes slightly that no one noticed. Not by accident, not by luck. I'm not reading that one. He actually did some funky accounting. He borrowed from Social Security. You'll find years and years of Social Security deposits that were not made into Social Security. He might be the biggest reason that we are having our Social Security problem right now, not having enough money. With that said, all of you who loved Reagan, it is fraud, Maud. It's in any company, it would be illegal. It would not follow GAAP accounting, generally accepted principles of accounting. But for those of you that loved Reagan, I thought he was amazing. We sometimes forget how much money he spent on Star Wars. How much money he spent on a system to protect us from nuclear bombs. So understand, back and forth, that you have to get the numbers correct. Now, I wish I could tell you about the deficit. In real life, if you go through the deficit, we're using the infinite banking concept. 8.4 trillion of our deficit of 27 or 28 or whatever we have is state government to federal government. Another 7 trillion is the Fed, which isn't part of the government, that has the big ballooned COVID 2008 still deficits tied to it. Our true deficit to other countries is also in the trillions, but it is a manageable deficit. I mean, if we were smart, we'd raise taxes for 4 years and cut off all government programs and be out of debt to foreign countries, minus obviously the ones that wanted to hold our treasury bills. But that puts us in a manageable position. A lot of what I went through this week, please read through The Folly of Certainty, understanding there is nothing that's guaranteed in life except taxes and death. It's a great article. Definitely, I'd suggest you go through it. The Big Picture talks a lot about politics. Seats, who's going to win? Who's going to do this? I'm going to speak outright. Mathematically, I can't calculate how Biden won. You can't not politic the people that seem to come from his rallies versus Trump's. Personally, none of it adds up. I'm not going to be a conspiracy theorist, but you can't, even when you look at how ballot counting had stopped and then started again, the reversal from going primarily Trump to no longer being Trump, it just doesn't add up. This is an interesting, the big picture this week is very interesting on saying, hey, it's a close race again. It's going to be choppy in between. It would be a lot better if we could just say, hey, Trump's going to take it. Kamala Harris is going to take it. The market loves certainty. And our elections right now are anything but certain. We don't even know if they're honest. I'm not saying that they're not. I'm just saying that there's doubt. And that doubt leaves for a choppy market. It would not surprise me if we need to stay protected from now all the way through our election cycle. That means we will be having short calls on. I've got our listed earning dates here. If you're going to ask me where the market's going to finish this week, I'm going to say lower, 2 weeks down for the Dow, 2 weeks down for the S&P. Still technically, nope, we are bearish now. It's funny because the Dow is bullish. We are now bearish on the S&P, 3 weeks down on the NASDAQ. And we are definitely bearish on the NASDAQ. And we're unable to get back above the 50-day, that blue line. All righty. Interesting. Boy, if only I'd kept it where I thought it was supposed to be. For 3 weeks, I was telling you July is going to be down 2%. Taking a look at the S&P, boy, it looks like to me it was right around, starting the month, right around just under 55. And we're just under 55. At one point, we had fallen down to that 2%. If I was going to ask you about July, I would tell you we should finish down 2%. I'm back to my expectation. If you ask me where we're going to end August, I think we're going to be down 2%. I'm not sure I see earnings moving us higher, especially when I see companies meeting or missing earnings, and good news is bad and bad news is good. It doesn't make sense. That typically leads to a drop in our markets. Tons of earnings. I stuck them out here for you. I have an article, can Boeing get back to its glory days? Really? Here's a company that screwed itself 10 ways to Sunday in the last 4 years, yet still has 95% of its business on its books. I'm just going to let you guys read the article and make your own choice, your own decision. With that said, again, shocking. They couldn't have blown it in more ways than anyone could have described. All right. Let's get through that one. Alphabet earnings meets earnings expectations, but misses in YouTube revenue. It has not looked good, but here's a great article to read on Google. Goog, Alphabet. Here you go. For those of you that ask me, what about earnings and what's happening? Ford shares tumble 13%. Please read through this article. This is why we're going to exit our Ford position. We're going to do it as a profit with the puts. They're going to be sold up at $14.50. A great article to read the numbers. It looks like Ford will probably not be profitable for another year. It's already lost almost over 30% of its value. Short seller Andrew Left of Citron. Here's another one that never gets taken out, made millions of dollars. I highlighted a couple things. It was fraud. He defrauded followers by publishing false and misleading statements regarding his supposed stock trading recommendations. Took 20 million from you. Never did some of the trades. And then the trades he did do, gotta love this one. One other article just to let you know. Left bought back stock right after advising readers to sell and sold stock immediately after making his buy recommendations. He took you for a fool. Here's another fund that falsified its returns, took 20 billion off of you guys, told you one thing, did the other. And you wonder why some of the average returns are misleading? It's because of idiots and thieves like this guy. NVIDIA could be on the verge of a massive technical sell-off, chart analyst warns. I have it all in here for you to make your own decision. It's a very interesting article. And it's funny because buy top tech stocks like Apple ahead of their earnings before it's too late. Yeah, Bank of America ringing the bell. Hey, when things go on sale in the store, don't run out of the store. Get in on it. And now market's now pricing 3 rate cuts at the end of the year on better inflation news. I'm going to call BS on that one. I should, through Dave, have these published here today. But are there any questions you guys have that I can try to answer for you about anything market related right now? All right, let's see. A couple ones just came in. I saw Disney puts were rolled today. Correct. And we also had an extra, sprinkled a little extra set in for the way down. Is this just a blip on the radar? Or do you think it's sort of an uptrend before earnings? I think it's part of an uptrend before earnings. And here's the two things that I'm going to give Disney. If you ask me, what is Disney's cash cow? What moved it to $208 or $209 a share? It was its movies. What was it? Took my daughters to it. Inside Out 2 is like $1.4 billion. The first $1 billion earnings that they've had on a movie this year. Wolverine and Deadpool opened up at 200 million plus on its first weekend. My expectation based off of those numbers, you have $2 billion more roughly on movies that were expected in the quarter. That's not correct. How did I say that? Out of the $2 billion on movies this quarter, $1 billion more was earned than expected. So out of the $2 billion, one movie, Inside Out 2, made $1 billion more than expected. Expectations were between $450 and $550 million. It did $1.4 billion. That extra $1 billion juices earnings something significantly in Disney. So because of that, we took our puts, rolled them from 98 down to 91. We took off the 90s. For somebody that had 95s, rolled those down from 95 to 91. We're building cash, and we're probably going to run Disney out of the money for their puts at earnings, thinking it's the start of an uptrend, at least back up to $115. We'll see if their old / new CEO, Iyer, can pull things back around like he did last time. Great question. Apple. Am I a believer in the Apple super cycle still? I don't know. To be honest with you, I don't know. But Apple had some pretty good earnings last time. All they have to do is talk about well, they have to show progress in their artificial intelligence. Their earnings are $1.34 and 84.173 billion. Excuse me. I think they can beat $1.34. I think they can make $85 billion. The problem with Apple is that they're picked on with 12 different metrics: iPads, iPhones, gross percentage, cash on hand, now AI, cloud services. I would think Apple would beat, but that doesn't necessarily mean that they're going to go higher, because they're picked on 10 different metrics instead of the 2 or 3: earnings per share, revenue, and guidance. Those are the 3 things that should run an earnings event. Apple has 7 or 8 other metrics that it's measured by. So I feel more comfortable with Disney than I do Apple, but I'm not telling you with any certainty that I know. That's why we protect. If you guys wanted me just to outguess the market, I'm sure I'd do better than average, but the returns wouldn't be the returns that you're expecting. That's what the puts are for. That's where we can cash in, like on Square today. Cashed in on Square, rolled puts down, added shares. But yes, glad that you noticed it. I'm probably increasing the cash in your account, and we might be increasing cash in accounts with put profits and short calls between now and the presidency, the election in November. Great questions, both of you. Any other questions you guys have? Are we going to be investing in Boeing? No, that article is to show you a couple different things. It's to show you how poorly they're run. But because there are few and far competitors, I mean, Northrop Grumman, Airbus, Lockheed Martin, Boeing still kept 95% of its business. It has good products. What it has is a DEI problem, a diversity, equity, inclusion crap. You pick the best engineers. You pick the best of the best to do the job. You don't put people in, and again, I guess this goes for pilots too. You don't put pilots in that haven't been trained, that can't read an English manual, that don't have the manual translated, that don't have hours in the cockpit. There are a lot of problems across the board when you don't try to hire the best person for the job. And I feel Boeing is the epitome of the DEI program, and they deserve it. The proof of that is in their hiring and their lack of quality, compliance and quality. And I'm going to politely say my information comes from 2 friends that's a mid-manager and a friend that was an upper level manager that quit because of their hiring policies. And again, the pilots again comes back down to the airlines overseas. If you're buying these type of planes from some of these bigger companies that are overseas, I'm going to use the Brazilian company because that's the one that I know, Brazil Air. They lack, how would I say this? From the pilots that I've spoken through Brazil that go through their big routing cities, if they haven't been through the military program or been taught over here, there's a really good chance that they, through their broken English, are unable to understand the manuals and the training hours that they're receiving in the simulators, which scares me, which is why as I was going between states in Brazil, I would take the bus, I wouldn't take the plane. And as I've talked to those that I know that are pilots through the major airways through Brazil that are Brazilian natives, they've got some stories that would just curl your toes. But that is not Boeing's problem. That is an airline problem. And Maud, I could probably show you dozens. Especially down in Brazil. All right, any other questions you guys have? Again, it comes down to, though, Boeing blew it. Boeing blew it through 3 CEOs, and I have a friend that is no longer working there due to what he calls is the upper echelon of management. He was an upper management as like a vice president, not as a CEO or anything like that. And he left Boeing and went over to not Rambus, not Lockheed Martin. He went over to a competitor. Any other questions you guys have? All right, I don't see any more coming in. With that said, if I don't see any more questions, guys, thank you for being here tonight. I know this might have been a bit of a touchy subject, but the short answer is we're going to have some volatility, and we're going to be protected through that volatility the best we can. I would expect that volatility to go from now until the election, until a more definite plan on rate hikes, until good is good and bad is bad instead of good is bad and bad is good. And we're going to be protected for that during that time period. Don't be surprised to see short calls added to positions because we may cap the upside. That does not mean we have to keep it in place. We're just trying to find more ways to make money on the way down than on the way back up. But our goal is to make as much money as possible coming and going. All right, guys. Hey, I appreciate you being here tonight. Thank you for your time. I don't see other questions coming in. Know that we're doing the best we can to get you protected. Guys, take care of yourselves and have a great night. I'll look forward to talking to you next Monday. Have a good one. Bye-bye.